Bitcoin is sitting at $121,583 as of the time of this video. The total crypto market cap sitting at 4.08 trillion. But the real story isn't about crashing prices and charts today. It's about boardrooms, parliaments, and courtrooms throughout the entire planet. In the last 12 hours alone, global institutions and regulators have once again made it abundantly clear that crypto is not a rebellion anymore. It is infrastructure. Fidelity just legitimized it. Luxembourg adopted it. The SEC politicized it. Ripple globalized it. Coinbase reopened it. And the UK just unbanned more of it. And this is just today. So today we're not going to be talking about crashing prices or any of the other stuff that most people are talking about. Today we're going to be talking about power. What is up, everybody? Solomon here. I hope you guys are all having a great day. If you like this content, please like and subscribe and share it. All right, I'm going to hop in briefly for about 10 seconds. I mentioned this at the beginning of the week. This is resistance. We faced it in August. We faced it at the end of September. We're facing it at the beginning of this week. We need to start printing candles above $4.17 trillion, give or take. And right now we're at 4.08. All right. Now, to get into some of the juicy stuff, because we all know where this space is going, Fidelity and the institutional turn. Let's start with where some of the real power sits on the planet. This isn't marketing fluff. So on October 9th, 2025, Fidelity Digital Assets released a 20-minute report called The Maturation of Digital Assets. This is pretty wild, actually. So there's a lot of really cool stats in here. Fidelity, for some context here, manages $5.8 trillion in assets, give or take, with over $15 trillion under administration. Obviously, one of the largest financial institutions on Earth, and they just said it outright. Bitcoin and Ethereum have matured into a distinct investable asset class. Now, we know this is all about all of crypto, obviously, but let's talk about legitimacy through scale and some of the data that Fidelity shares within this document here. Bitcoin, $2.2 trillion market cap, the world's 8th largest global asset. Ethereum, $500 billion, among the top 25 assets on the planet. Spot Bitcoin ETFs, $35.5 billion in net inflows during their first year. For some context, that's the fastest ETF adoption in history. What do you think is going to happen? We've already seen some small stats around XRP, spot ETF stuff in the US with the Rex Osprey one, and breaking tons of records. I would expect that trend to continue throughout all of crypto. Stablecoins, $18 trillion in transaction volume over 12 months. Listen to this. That's more than Visa's $15.4 trillion. Yes, stablecoins transaction volume has surpassed Visa. Institutions and treasuries, 700,000 Bitcoin plus 3 million Ethereum held on balance sheets. That's over $70 billion combined. Bitcoin's market cap grew from nothing to $1 trillion in 11 years. Apple took 37 years. Institutional ETF positions doubled in a single quarter from $12 billion to $27 billion. And there's been a shift in institutional mindset as well. Fidelity just surveyed over 1,500 institutional investors. 88% of those find digital assets appealing. 81% of those believe digital assets belong in portfolios. 65% of those plan to increase exposure during the next cycle. Bitcoin's 2024 settlement volume topped $6 trillion. It rose 113%. Ethereum rose 42%. Now, we know that assets like XRP, HBAR, you can literally probably pick almost any altcoin, have massively outperformed Bitcoin and Ethereum. But Bitcoin and Ethereum, even alone, outperformed the S&P 500 by about a 5x, okay? The volatility that once scared Wall Street is starting to dissolve away. It's comparable to kind of major tech stocks in the past, but Fidelity now calls crypto and blockchain distributed ledger legitimacy through scale. The conclusion that Fidelity has here is that the opportunity cost of ignoring digital assets is rising. The translation is, if you're not in, you're falling behind. This is the point where rebellion becomes recognition. Bitcoin isn't just considered digital gold anymore. It's a geopolitical asset. Ethereum isn't just experimental code anymore. It is legitimately global infrastructure. Anybody that's telling you that that isn't the case with Ethereum is lying to you based on everything that we've seen. Regardless, super bullish on XRP and all these other assets. I don't even hold Ethereum, and it's common sense. That's not to say it doesn't get supplanted or surpassed at some point in time. Maybe it will. But when a $12 trillion institution says it's time to pay attention to the digital asset space, it's not hype. It's the transfer of financial power in real time. All right. And you can go check this report out, fidelitydigitalassets.com. It literally just released. There's a couple of really cool charts on here. Internet and digital assets adoption since inception. So it essentially puts internet usage in a year since inception chart against Bitcoin addresses, Ethereum addresses. It also puts the world's biggest companies and assets right alongside of each other as a kind of a comparison. Corporate treasuries, all sorts of stuff. Aggregate stablecoin supply. This is a pretty freaking fascinating document, if I were to say so myself. All right, I'm going to move on to segment 2 here. This is a long video, guys, so bear with me. XRP misinformation, as we always like to see across Twitter. There's a couple of big Ripple announcements that come out, and you kind of see the low-hanging fruit of it has to surround itself around XRP, or literally the $ XRP, even though it doesn't mention XRP at all in any of the documentation. But I saw two things today. So I saw XRP in Bahrain, like Bahrain's going to be using XRP, which nowhere does it say that. I also saw something around this Luxembourg Eurozone sovereign fund saying 1% of Luxembourg's sovereign wealth is going to be an XRP. No, that's like the announcement is around Bitcoin. So Ripple's partnership with Bahrain FinTech Bay, which we're going to be diving into in this video a little bit more later, focuses on tokenization, pilots blockchain payments, and Ripple's Ripple USD stablecoin, not national XRP adoption. Luxembourg's sovereign fund allocated 1% of its $730 million portfolio into regulated Bitcoin ETFs, not XRP. So any of the stuff that you see scrolling across Twitter, which the whole purpose of that stuff is to get clicks and likes, and everybody's supporting that stuff. What's crazy to me is that real adoption doesn't even need rumors at this point in time. There's so much bullish crypto adoption that, like, why make up stuff? Like, and it just, to me, it's laziness, and it's obviously like a heavy amount of grift. So anyways, let's get into this Luxembourg sovereign wealth fund adoption, and then we're going to dive into Ripple's Bahrain announcement a little bit later. What actually happened is Luxembourg's intergenerational sovereign wealth fund just became the first Eurozone state fund, the first in the Eurozone, to buy Bitcoin ETFs. They allocated 1%, or around 50 million euros, into regulated spot Bitcoin products. FSIL's revised policy allows up to 15% exposure to alternative investments like digital assets. Finance Minister Gilles Roth called it a balanced approach to innovation and diversification. Again, this is the Eurozone's financial core, quietly legitimizing Bitcoin as a reserve component, not hype, just history. And if Bitcoin gets through, as it normally does first, what do you think comes next? It's all the digital assets that we talk about all of the time. Also, regulatory flips. So I'm going to move into the next segment here because there's a ton of news I've compiled for you guys today. Found this interesting little kind of breakdown here. This is from Better Markets. And also this is FCA lifting the ETN ban. I think this was yesterday for the UK. So let's dive in. Regulation across the board isn't killing crypto anymore. It's codifying it. The UK's Financial Conduct Authority, so we'll start here. UK's Financial Conduct Authority just lifted its 4-year ban on crypto ETNs, reopening the door for retail investors and unlocking roughly £5 billion in potential inflows. That's the clearest sign yet that London wants to be a European crypto hub under MiCA, or Markets in Crypto Assets. Meanwhile, in the US, which will go here, the Security and Exchange Commission's Project Crypto under Chair Paul Atkins is redefining the conversation. This is a DC report accusing Atkins of politicizing the agency, but the details reveal something bigger regardless of your political viewpoint. Atkins described Project Crypto as, quote, the North Star in helping President Trump make America the crypto capital of the world. He praised the Genius Act, or the Stablecoin Act, for giving stablecoins a federal framework, calling it a monumental step forward for financial markets and for the entire nation. The SEC, Congress, and White House are finally aligned, and the U.S. isn't fighting crypto anymore. It's building it. And it's building to, dominate it, as we've kind of seen. All right, I also want to, this is in the same vein as this. This is staking now available in New York for Coinbase. For New York citizens, we know that they have kind of been kept out of the value loop for a lot of this crypto stuff. Anytime something cool seems to happen, I always feel bad. I'm like, that sucks for people living in New York. But anyways, at the platform level, real access is starting to return. Coinbase re-enabled staking in New York. So Ethereum, Solana, Atom, and other assets all available again to New Yorkers for the first time in years. Coinbase estimates residents in other restricted states missed out on literally $130 million in rewards during these bans. So not only has this access gate kept people from learning about crypto, but it's actually gate kept people from participating in things that could have literally changed people's lives. Obviously, it comes with risk too, but they also reaffirmed that staking as a service is not a security, backed by recent SEC guidance and recent court dismissals. Literally here, where this is an entirely new kind of frontier for crypto in the United States, and it's, regulated yield essentially is back on United States soil. All right, we've got incumbents and infrastructure. So a little bit more down the rabbit hole here. Coinbase and MasterCard both held advanced talks to buy stablecoin startup BVNK for around $2 billion. So this is kind of the quiet layer underneath everything that we've been witnessing. And this started years ago with mergers and acquisitions with some of the traditional fintechs, some consolidation around traditional fintechs. Now we're starting to see mergers and acquisitions around the crypto space, which I would certainly expect that trend to continue. I think earlier this year, maybe last year, we saw Casper Labs essentially become a part of Hedera. So, I would expect more things like these things to happen across the entire breadth of crypto as the technology just matures. Some companies are going to essentially be merged into others or outright acquired by others. It's also, as a sidebar here, I think that's kind of what's going to end up happening to some of these really innovative platforms. I think you see people building out like marketplaces and stuff like that. I think we're probably going to see acquisitions of those as well. I don't think we're there yet, though. So Fortune reports that BVNK is expanding into global payments, while Coinbase and MasterCard integrate stablecoin settlement rails into cross-border transactions. Again, I think the narrative and the writing is on the wall with what we're seeing with cross-border stuff and settlement stuff. I think stablecoins rule the roost, guys. It doesn't mean that I don't believe in ecosystems like the XRPL and XRP as kind of just like this really highly liquid value mechanism in an ecosystem full of RWAs and tokenized assets and payments and settlements and maybe last mile stuff in certain jurisdictions. It's just what's going on. Stablecoins are kind of that, they're not an app, but they're kind of the killer app moment for crypto, at least in my opinion. So this isn't crypto versus banks anymore. It's crypto becoming the banks, essentially. Now we've got speculation and attention. Some kind of low-hanging fruit articles here, though. I'll issue a gigantic word of warning. This isn't sponsored by Binance or any of that, but Binance released essentially Meme Rush, which is a Binance wallet exclusive gateway to high potential meme tokens. And I don't know, guys. For me, this is kind of the part of the reason why the title was I'm not selling. Like, I don't really mess around with utility assets at this point in time. Look, if you guys want to go down the meme coin path, those markets are going to continue to be successful. However, that comes with an insane amount of risk. You are literally gambling if you're, and there's a whole, I would actually argue it's probably still the biggest use case for crypto, but I think that will slowly change, is just like straight up degen gambling stuff. And that's fine if you're doing that. That's up to you. That's your decision. I'm not advising you to do that at all, but I am telling you guys to exercise caution when you do that, because a lot of you guys probably are like me, where, a lot of you guys are different than me, but I've advocated for only invest as much as you're willing to afford to lose completely in this space. And I know a lot of people, I've seen a lot of posts that they're like, $100 or even $10 or even $50 is a lot of money for a lot of people, and that's very respectable. I would hate if you're putting a lot of your hard-earned money into something that you believe in, that you've done research in, like a utility-driven ecosystem, or what you would consider to be a utility-driven ecosystem, and then you start getting involved in some of the stuff that's more gambly, because I've seen people kind of lose it all, and I do not recommend doing that. So this stuff is only going to increase, and at least, you know, we've seen kind of with the current regulation by not regulating, which is like a total polar opposite than Gary Gensler's SEC. You can look at it as a positive or negative way. I think this stuff's going to continue. I think the ease of onboarding into crypto, the meme platforms are going to continue to get easier to onboard in. But when it's easier to onboard into something, it's also easier to lose your money. So just be very cognizant of that. I think another really kind of fascinating use case that we've seen with crypto, but again, this kind of gets into the predictions. Prediction markets, Polymarket has become absolutely huge. And I saw that CEO Shane Copeland is the youngest self-made billionaire at 27 years old, valued at $1.2 billion, with Polymarket platform pushing $2 billion in weekly volume. There's rumors of a Poly token coming down the pipeline, but nothing confirmed as of yet. And let's get into Ripple and Bahrain here, because I said that we would, and I want to get into it because I think it's a huge announcement. While everybody else is kind of debating, Ripple keeps building. On October 9th, Ripple introduced a strategic partnership with Bahrain FinTech Bay. This is the Kingdom of Bahrain's flagship FinTech incubator. The goal here, and this is directly from Ripple, is a pilot program for tokenization, stablecoins, and blockchain-based payments using Ripple's Ripple USD, which is the stablecoin, as well as institutional-grade custody solutions. Now, this follows Ripple's Dubai DFSA license, making Ripple the first blockchain-enabled payments firm licensed in that jurisdiction. So this isn't about XRP taking over currencies. It's Ripple integrating compliant digital infrastructure directly into national banking systems and some of these government entities. Quiet, regulated, permanent. And you can look more into Bahrain's FinTech Bay here. Partners, it gets into FinTech partners, financial institution networks. You can see probably some familiar names in here. I think I saw R3 earlier. Yeah, R3. And I'm assuming at some point Ripple will probably be added into this as well. I want to say, and I might be mistaken. Oh, no, I'm thinking, so Dubai DFSA license. I was thinking DIFC courts in Dubai, which I know Hedera has. Yeah, I know Hedera has relationships in their Hashgraph Association, or one of them. So anyways, we're witnessing a convergence, and I want you guys to kind of zoom out here, because I know it's really easy to focus on price, and I apologize for this video being a little bit later, but Fidelity, this Fidelity document alone should raise a lot of eyebrows. I mean, I remember back in 2019, 2020, this type of stuff wasn't coming out. 2018, 2017, 2016, it certainly wasn't coming out. But when I really started trying to create content and finding content and stuff like that, I mean, you were lucky to find like Bank for International Settlements or European Central Bank or Bank of England, like even like hesitantly saying something like that wasn't negative about crypto, let alone like glaringly obvious, like what's coming. Yesterday, we did a video of Franklin Templeton's future investing platform, like, and they tweeted about it. Like, it's not, we're past the point of these crypto entities having to like make things up to get recognition. You have the entities, the traditional financial incumbents themselves telling you what's coming. This is why I find it so interesting that when you see such like blatant misinformation from like people that are trying to obviously create a name for themselves or get more YouTube clicks or views or whatever. And yeah, I'll try to make my graphics hypey every once in a while. I haven't done a hype video with like music and screaming in a couple of years, and some of the OGs probably remember those. But you don't even have to like make stuff up. I mean, it's right in front of your face what's happening. And these documents are like really freaking powerful. I mean, for context, they're literally putting crypto on the same chart as gold and Nvidia, like the biggest company by market cap on the entire planet. And you know, one of the most sought after kind of physical asset on the planet for hundreds of years, thousands of years, gold. So I don't know. I mean, you've got a document like this with Fidelity. You've got Luxembourg essentially sovereignizing it, the tech and Bitcoin with what they just announced, which we went over. The UK and the US regulating it. All these entities regulating it. Coinbase reopening staking and reopening services in New York. You're starting to see acquisitions and bidding on other, some other crypto companies. You're seeing Ripple go global. You're seeing Binance and Polymarket monetize all of this stuff. And obviously, again, I'll wish you a caveat and a word of warning for some of the other stuff. A platform like whatever that was saying, like catching meme coins early. I'll tell you one thing, and this is advice. This isn't financial advice. This is just common sense advice. If you see somebody talking about something, and we've all made mistakes in this space, and nobody's perfect. Even like bigger accounts aren't perfect. I'm certainly not. I've made mistakes, really dumb mistakes in this space before. But when you see somebody with a big following talking about something on a platform, whether it's Twitter or YouTube or whatever, and it's like a newer thing that you hadn't heard of, or it's like whatever, especially Twitter, it's probably like those people are already fortified in their positions with stuff. And not all of them disclose when they have like financial relationships with projects. I try to do my best out of the Genfinity stuff to give you guys a heads up. Obviously, we work with like Hedera and XDC Foundation and Algorand, like all these ecosystems that I've mentioned when I mention them. But there's a lot that are like, hey, this is awesome, and zero disclaimer about what's actually being held. So just a word of caution around a platform like this, and I'm sure it will do amazingly well. But anyways, I'm going to ramp us down here. They told us crypto was a bubble. They told us crypto was a bubble for every cycle. And maybe it is a bubble this cycle, but long term, I think the writing's on the wall. Fidelity calling it a core asset class. They said all the governments would ban it. I remember that. How many guys you guys have been here for a while basically saying that it's going to get banned? Luxembourg and the UK just bought and legalized crypto. We see the same thing in the United States. They said governments would ban it. They said staking was dead. Coinbase just brought it back in New York. They said regulation would kill innovation. The SEC and Congress are now literally changing laws. Project Crypto the SEC has said definitively that they are changing the rule book for innovation. So they're changing laws for innovation. So the SEC and Congress are building policy to grow crypto now. They said it was just about price, and it still isn't about price. Not right now, not for these financial institutions and these heavy hitters and these entities. Not yet, at least in my opinion. Right now, I think it's about power. I think it's about acquiring as much stake as they possibly can. It's kind of a land grab for the future financial system. It's a land grab for kind of the future of everything. Like I've said, it's not just the future financial system. I've said this multiple times. I believe crypto, distributed ledger, and blockchain are just the next iteration of the world. I think it's the next iteration of the internet itself. And it's really interesting to watch all this stuff unfold because we are at a position where it can't be about price right now, at least because if you think that way, like this is why it's so frustrating that price hasn't done what we want it to do yet. Because it's very clearly not about price yet. You still have an individual company, NVIDIA, which has a bigger market cap than all of crypto combined. So if it was about price, that wouldn't be the case right now because NVIDIA is going to use distributed ledger and blockchain and crypto, and they probably are already trialing out X, Y, and Z within it. So we're not in a utility bull run because you still see platforms like introducing Meme Rush. And I don't think memes go away. And I think memes are cool and all this other stuff, but understand them for what they are. They're gambling and they're kind of a social metric and all this other stuff. But I hope you guys enjoyed this. Otherwise, I start getting excited and I start rambling. But bottom line is, a lot of these big players are still lying to people or just outright, and not mentioning what's coming is also a way of lying. And when you watch the mainstream media and polarizing news content and stuff like that, it's like Bitcoin crashed 3% today and it's super risky and all this stuff. Like, yeah, there's risk, but there's risk in everything. But they're not telling you what the enterprises, the financial institutions, the banks, the governments, everybody in the world all the powers that be in the world, the 1% of the 1%. It doesn't tell, they're not telling the mass populace when you're watching the mainstream media what's actually coming. So they're definitely lying. And I have said this before. I just do not like, I don't day trade certain things, and like certain assets I plan to just hold probably for the long term, because honestly, even if I look back to 2016, 2017, I had some Bitcoin back then. I probably would have been better off just not messing with that Bitcoin. Most times when you start getting into, yeah, let's trade, or this looks good, or here's a green candle and I'm going to chase that, it doesn't end well. Most times when you have the perseverance to stick with assets that you've researched into, not buying at all-time high, all the other stuff that comes along with it. I mean, we've talked about how long it's taken XRP to break all-time high. It wasn't easy to hold through that. But for those that did, it wasn't really that long of a time frame. I mean, I see a lot of stuff right now, too, with silver and gold, which is pretty awesome to see, but we won't get into the weeds there. Anyways, I will talk to you guys when I talk to you, because this was a really long video. And, yeah, hope you guys have a great rest of your week. Maybe I'll do a video tomorrow. I don't know. All right, bye.